Hi there and Happy New Year. I hope that 2018 is off to a great start for you and wishing you all the best in the upcoming year. I wanted to reach out to you guys and talk a little bit about a question that keeps coming up, and that is regarding the new tax bill that recently passed. I want to start off by saying, obviously, I'm not a tax advisor or tax professional, so you definitely want to reach out to your tax advisor and ask him or her about how these specifically impact you and your family. But I wanted to give you a little oversight, some bullet points on some of the changes and what to look out for. One of the big changes is the mortgage interest rate deduction. Before, you can write off up to $1 million on your mortgage interest rate, up to loans up to $1 million. They were looking at bringing that down to $500,000. Luckily, they ended up in the middle at $750,000. So you can now only write off interest on mortgages up to $750,000. However, if you had your loan already in place prior to December 15th of 2017, you are grandfathered in. So if you took out your loan prior to that, you have a $900,000, $800,000, $1 million loan, you are grandfathered in. So these will take effect on all loans that went into place after December 15th of 2017. Another change that they have done is on the home equity lines or second mortgages, HELOCs. You were originally able to write off up to $100,000 on those. Under the new plan, it's no longer something that you can write off. So that's gone away in regards to that. Second homes or vacation home write-offs, that is also gone. You can no longer write off the interest on second homes or vacation homes. You can still, obviously, if you have an investment property, it's showing up on your Schedule E, that's something that you can still take advantage of. But if you have a second home, no longer can you write off the mortgage interest rate on that. Another big change as part of the tax plan is SALT, the state and local income taxes, state and local taxes. This includes both state income tax as well as property tax. This is now limited to $10,000 total for either one of those. In places obviously like California and specifically here in the Bay Area, if you own a home or just buying a home right now, you're going to hit that $10,000 mark on your property taxes fairly quickly. So that's going to be, I think, a bigger change than the mortgage interest rate deduction, because before there was no limit on that, and now it's down to $10,000. The other change is unreimbursed business expenses or 2106 expenses. You can no longer write those off. We have a lot of clients, whether they're police officers, firefighters, anybody who has unreimbursed business expenses where they were writing those off. Unfortunately, you're not able to write those off anymore. So that's another big change that's come into place. Another change to kind of think about is on the, actually not a change, which is a good thing, is on when you sell your home, the capital gains from that. Originally, if you live in the home for 2 to 5 years, you're able to write off up to $250,000 if you're a single filer, or $500,000 for married couples if you live in the home 2 of the last 5 years. They were looking at changing that, moving that to 5 out of the last 8 years, and luckily they did not move forward with that. They kept that in place, and it's still 2 out of the last 5 years that you can live in the home and not get hit with the taxes when you come to sell your home. Again, these are just some of the changes that are taking effect and that affect the real estate community, mortgages, and when you come to buy a home. Please reach out to your tax advisor, ask him or her on how this is going to personally affect you. If you need a referral to somebody, please let me know. I'd be more than happy to refer you to someone. And also, we are putting together a lunch and learn that's going to be coming up at the end of February, either February 21st or potentially March 21st. We're still working out the details. We're going to have a tax advisor come in and talk to you guys about what these changes are and how it may affect you. If you have any questions, feel free to give me a call. My number is 925-708-7178. Thanks for your time and hope to talk to you guys soon. Bye-bye.